Hi there, Shingirai here again with another update on portfolio performance over the past week. On a 1 week basis, 3 out of 10 of the CBAM portfolios outperformed their respective benchmarks with returns ranging from 0.74 for CBAM portfolio number 1 up to CBAM portfolio number 5, returning 1.72% on a relatively risk-on week. All top contributors to performance on the 1 week basis returned north of 3%. You can see that performance again being strong consistently for JP Morgan Japan on the back of some opening re-optimism with China as the largest trade partner, and as well as some political stability with the Liberal Democratic Party firmly achieving a control of the parliament. We also see some strong performance from Pictet Clean Energy alongside iShares Global Clean Energy, both positions up more than 7% on the 1 week basis, on the basis of some opportunistic buying for growth companies that have been heavily derated. In terms of detracting from performance, again the narrative has been consistent. Coming into the quarter, weakness on Chinese equity markets on the back of some weakness there on the property markets, and again another rolling lockdown in the Wuhan province, and I would see all three performing funds, HSBC, Columbia Threadneedle and Bailey Gifford, being Chinese equity positions down more than 3% on the week. The weakness of China would translate to also broadly emerging markets, and I would see legal and general emerging markets also down on the 1 week basis, as Chinese equities rather represent about 33% of the global MSCI emerging markets. On the 1 week basis, again we saw some bounce back in performance from our growth equity positions, with European and UK positions up more than 2% on the week. Moving over to a quarter-to-date basis, 4 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from 2.77% for CBAM 1v2 up to 5.38% for CBAM 5. Again, we see that protracted strength from global clean energy positions, with both Pictet and iShares Global Clean Energy up more than 15% on a quarter-to-date basis. And then the narrative on Japanese equities bouncing back after previously being sold off in the first half, up 13.02%, which has been consistent with the strength of the moves we've seen on the 1 week, seeing as we're only 5 weeks into the new quarter. We continue again to see headwinds for Chinese equity positions for reasons previously mentioned, and I'll see Columbia Threadneedle, Bailey Gifford and HSBC MSCI China down more than 9.3% on the quarter-to-date basis. On a quarter-to-date, we also continue to see a protracted weakness from our gold positions through iShares Physical Gold and our active fund manager 91 Global Gold, both reflecting negative position performance on a quarter-to-date basis on the non-interest-bearing asset in a rising interest rate environment. Again, European and Japanese equities strong on a quarter-to-date basis, with both of our active managers up there in Europe and Japanese equity spaces up more than 10% on a quarter-to-date basis.